Well, 2022 has been one of the worst years for the stock market that I can remember. The question is, will we see a reversal of this stock market crash in 2023? I'm going to teach you what to look for and give you my thoughts. Plus, I'll do the normal weekly market analysis and we'll look at the day trade of the week on ORIC. All right, so the markets are down 20 to 25% in the past year. It's been one of the most dismal years for the stock market in, say, the last 20. So the question is, what is next? Well, the answer to that question ultimately lies in the charts. The key thing to look for is a break of the downward trend line from a rising bottom. I've talked about that many times. We've had a number of times this past year when the market has threatened to break that downward trend line, but it was never from a rising bottom. And as a result, each time it hit that downward trend line on the weekly chart, for example, it got stuck and reversed lower. The most recent was a few weeks ago. And of course, we've had fairly dismal market performance the last couple of weeks. However, there is a pattern shaping up on the S&P chart and the Dow chart and the NASDAQ chart and even the Toronto Stock Exchange chart, which could tell us that the market is likely to reverse. So I want to show you what that pattern is. But first, let's just go through a few different factors. Right now, the downward trend is still intact. So we need to see that reverse. But one thing I've noticed is that the downward momentum has slowed. And I'll show you this on a chart in a moment. Now, the market prices in economic factors about 6 months in advance. So always keep that in mind, because what you're reading about in the media or listening to in the media is typically 6 months behind what the market has already figured out. So now there's a lot of negative headlines in the media about inflation, perhaps the potential for a recession. But remember, the market's already down over 20% this year. It has priced a lot of that in. The market is forward looking. What's coming next? And that's what we want to watch for. So don't be swayed by what you see in the headlines. Now, the key is to break this downward trend line from a rising bottom. Until that happens, you want to focus on alpha stocks, which are those stocks trading on their own story with abnormal volume, or inverse ETFs. But the first chart I want everyone to take a look at here is a very long-term chart of the S&P 500 ETF. This is the monthly chart, and I rarely show this one, but I think it's very important because you can see how many times this trend line has been hit. Price would run away from the trend line and it would come back. Price would run away from the trend line. There's the COVID crash. It came back and it held that trend line on the monthly time frame. Well, then we just went exorbitantly higher. And so you could argue that we've got to come all the way back to this trend line before we find support. And that's still quite a distance down. We're at just under, I think we're about 380 on the S&P right now. That trend line is sitting at around 300. That means you could see another 20% downdraft until you hit that trend line. But before you get too concerned about that, let's look at the other important chart, which is that of the daily time frame for this same chart, the S&P 500. And there you can see that downward trend line that I've talked about, the fact that we've hit that numerous times. But notice every time we hit it, we were coming off of a low that was lower than the previous low. So here we hit it and we were coming off of a low lower than the previous. And again here, lower than the previous. So that's why we haven't really been able to gather the momentum to the upside. If the market were to reverse early in January and move back up toward this trend line from here, we would have the right shoulder in a head and shoulders pattern. Now listen, head and shoulders pattern, cup and handle pattern, all those names mean nothing. What's important about this pattern is that we're switching from falling tops to rising bottoms. Let me show you that. Falling tops, switching to rising bottoms. Now we haven't made the bottom on the right side yet because we would have to go back up to the trend line first. But if that happens, if we get that reversal early in January and make that rising bottom, then we will have set up for a break of the downward trend line that has been in place all through 2022. Now, none of that has happened yet. So on one hand, we're still quite extended above that long-term monthly trend line. So that's the negative argument. On the other hand, we are potentially building a right shoulder in this pattern, which could culminate in a break of the downward trend line. These are extremely reliable patterns, so I show them because they represent what the crowd is doing with their money, what people are doing when they vote in the market by buying or selling stocks. Now, I said that momentum was slowing. Let me show you why we say that. So I'm going to delete all this markup here. So notice that the slope of the downward trend is like this. If I draw a line across the bottoms, you can see that that slope is a little bit more shallow. All right, it's not a lot different, but it is different. And that is what we call a falling wedge pattern. What it means is that when the sellers push price down, so here they pushed price down, and then the next time they pushed it down, they weren't as able to push it down as much as the previous time. And that is a sign that the sellers' enthusiasm is starting to wane. You're starting to see a reversal of that negativity. So ultimately, what matters most is, can we break the downward trend line from the rising bottom? We'll watch for that very closely in the new year. But until that happens, what should you do? Well, you trade alpha stocks, which is more of a short-term trade. So alpha stocks are characterized by abnormal volume and abnormal price action. Even in the down market that we had the last couple of weeks, there were still stocks that went up significantly, like 100%, some of them in a very short time period. And they're all characterized by abnormal volume, abnormal price action. We find those every day using my algorithms in the active live webinar that I run every day. Now, the other option, of course, is to trade inverse ETFs. These ETFs go up when the market goes down. And so if we get a negative breakdown in the market, like we had, a couple of weeks ago when this upward trend line was broken, you can buy the inverse ETF, sometimes leverage. So, for example, TZA is triple leverage to the IWM, to the Russell 2000. So it goes up 3 times as fast as the Russell 2000 index goes down. So if the Russell goes down 5%, this should go up around 15%. It's not quite perfect because they have a rebalancing that happens every day, but it's very close. All right, so that's another way to profit in a down market. What I am doing primarily is focusing on alpha stocks, and I think that's the key thing until we get the reversal. But what's really important is that you don't turn your back on the market. Everyone's really excited about the market when it's going up, but that is when it is most risky. When the market's gone down as much as this one has, the risk gets lower and lower because things are on sale. There's bargains in the market. And you just need the psychology to change. And when that psychology changes, you can get very sharp reversals and lots of good opportunity. I don't want anyone to rush out and buy stocks tomorrow or soon. But when you start to see that momentum turn, when you see that downward trend line turn, then it's time to start picking away at some bargains. All right, let's take a look at the overall market. We'll just jump over to the Stockscores website for that. So we're back at the S&P chart. Let's just look at the short-term 60-minute chart here. You can see lots of crazy volatility this past week that shows that investors are very uncertain. But who's winning the war in the short term? The sellers are. We can answer that because the tops are falling, the sellers are in control, so that's a negative chart. If we look at the 3-year weekly chart, you can see that the sellers are in control. The tops are falling, but all we have to do is break that downward trend line from this rising bottom, and we can start to make a comeback in 2023. How about the the Canadian market? So T.XIU, let's look at the 1-month chart, 60-minute time frame. You can see who's in control. I always ask this question first. Who is in control? The sellers, because the tops are falling. But we're getting a little bit of a rising bottom there. And so if we can start to break up through this, we could see the Canadian stocks make a little bit of a comeback. And one of the reasons, which I'll talk about later in the video, is the oil market is starting to get a little better. And we may see the oil stocks sort of prop up the Canadian market. In addition, you also have had some strength in gold mining stocks, which have a heavy denomination in the Canadian market as well. So those commodity sectors in the Canadian market prop up most of the market. And because the banking sector is quite dependent upon those commodity sectors, those banking stocks start to look better as well. So it's a little bit of a chain reaction in these different sectors. All right, let's take a look at, let's look at gold and oil. So start off with oil. And I'm going to take a look at BNO. It tends to be a little bit better representation of the oil market. And we're going to draw a trend line. So we're going to start at the low, And we're just going to let our line come up until it hits as many points as possible. So it's not a science, it's an art, but basically you can see that we're more or less hitting all those points, and we're right at that trend line now. And so that's why I've noticed a little bit of strength this past week or two as oil is bouncing off of the trend line. It's not out of the woods yet. We still have falling tops, but if we can start to bounce off of this and maybe come back, you may see that oil market do a resurgence. Not there yet, but it's close, so keep an eye on that. How about gold? GLD is the ETF that represents gold, and let's look at the 3-year weekly on that one. Here you can see gold broke the downward trend right there, and it's been sort of inching its way higher. If we look at a very long-term chart of gold, what you see is that long-term gold is in what's called a cup and handle pattern, and it had broken down here, and it's trying to make a comeback. If it can come back into this trading range, then ultimately maybe 6 months from now it could break out and be strong. I think right now all that we're seeing is a little tradable rally in gold, and that's mostly because the US dollar has weakened. So I'm not a real bull on gold so much as it was a little oversold from the strength in the US dollar. US dollar's come back, gold is coming up. I don't know that it's going to make a sustained run higher. It's more a short-term thing. And if we look at the short-term chart of gold, you can see that it's losing some of its momentum. We had pretty good momentum here, and in the last couple of weeks, we've more or less been going sideways. So what you want to watch is if gold breaks down, so again, this is GLD, if it breaks down through this 165, 164 zone, that would be a bit of a negative. All right, how about interest rates? TBT represents interest rates. In terms of a chart, it's not really interest rates, but you can see what we talked about in the last couple of weeks about how interest rates had pulled back to that trend line. This is exactly what I predicted last week, that we would see a bounce off this trend line, and we have. That means interest rates have taken a little bit of a jump higher. And again, this is the bond market interest rates, not what the US Fed does. This is the actual bond market. However, I don't know that we're necessarily going to go skyrocketing higher. I think we may just come into here and get a little bit more stable at a stable level of interest rates. We'll see, but right now this is still a bullish chart because we did hold that long-term upward trend line. How about the US dollar, UUP? Let's take a look at the 3-year there. You can see the US dollar's trend line is basically there, so we're almost at it. When we get to that trend line, I think we may bounce. And given that the interest rates bounced back in the past week, that may motivate some buying of the US dollar as the bond market sort of attracts some capital as interest rates go higher. Well, actually, the bond market goes down, interest rates go higher. But you may see that bounce of the US dollar, and that could be negative for gold and maybe for oil. Oil hasn't had the same correlation to the US dollar as gold has, and so it's more, if the US dollar bounces, that could be negative for the US dollar, or for gold, sorry. But I don't know that it'll be real negative for oil. That's more demand related. I think a lot of eyes are on China and what's happening with consumption of oil over there. Now, the last chart we'll take a look at is that of Bitcoin. I know a lot of you like to play the crypto market. It's been a disaster. I've been a bear on this a long time, and you can see why. Simple question, who's in control? Falling tops, sellers are in control. Don't ever try to buy things when the sellers are in control. It's like trying to catch a falling knife. Wait for the build of a rising bottom. Wait for a break of the downward trend line. There's no reason to touch this thing until you see that start to happen. Now, if you're a trader, you can monitor it on the shorter term time frame. This is an hourly chart, and there you can see we actually starting to build a little bit of optimism, but that's just in the last 2 days of trading. It's really very minor and only for like a day trader of cryptocurrency. So my ratings then, US stocks remain bearish on both time frames. Canadian stocks a little bit better, neutral long-term, bearish short-term, sort of being held up by that oil and gold markets. Gold neutral long-term, bullish short-term. Oil neutral on both time frames, but trying to hold that upward trend line. US dollar neutral long-term, bearish short-term, but at the point where it should bounce very soon, perhaps another week or two, and then it'll bounce. Bitcoin bearish on both time frames, and interest rates neutral on both time frames. Long-term upward trend is intact. We've bounced off of the trend, but I think interest rates probably just try to hold in here. We'll see what happens in the weeks ahead. All right, let's take a look at the day trade of the week. This is an example of something that we pick up on with our Active Live daily webinar service, where you're watching my real-time algorithms look for opportunities in the market, all computerized. I hold your hand a little bit through that and teach a lot through that. You can learn more about Active Live on the Stockscores website. And so the day trade of the week, it's very slow, obviously, because of the holidays around the corner. But this is one that we picked up on right at the start of the day. It met the requirements of something called a alpha echo strategy, where it was breaking a 13-minute pullback. It's one of my swing trading strategies, but it also had some pretty good day trade setups. There was one here, we call that a pullback play. I didn't love that one because yesterday or Thursday for ORIC was also quite abnormal. So I usually like it to be a little bit more of a pattern build, and that's what we got later in the day. Later in the day, the stock had built this ascending triangle with an action candle breakout, and it made a little move out of that. Not a big move, but on a day when the market was very dead, volume was very light, that's about as good as it got. And some days, that's just the way you have to trade them. You might have made 1 or 2 times risk on that trade. Well, I hope that you've enjoyed this week's Market Minutes. I want to wish you all the best for the holidays. I will be taking a week or so off, but be back in the new year. And so Happy New Year as well. And we'll see you all in 2023. If you intend to trade through the holidays, not bad. You know, there's always something to trade, but it'll be a little bit quieter. But certainly if you're going to do that, make sure that you, as always, trade well.